And if it falls below that, we know like, okay, we need to start being careful. Like, what is the next thing that we are going to do? But having those numbers and having that data is going to replace panic with process. You're not just reacting to the information all the time. You are proactively reviewing and knowing what you need to do ahead of time.
You didn't start your practice to barely hang on. I'll guess you started it for freedom, impact, and profit. This is Therapy for Your Money. I'm your host, Julie Harris. I'm an accountant, author of Profit First for Therapists, and CEO of Green Oak Accounting. Over the years, my team and I have partnered with hundreds of private practice owners, whether they're just getting started, scaling into thriving groups, or even preparing to sell. We've seen it all, and we know exactly what makes a practice tick financially. On Therapy for Your Money, I'll help you build a business that truly works for you. You'll get quick, actionable tips and episodes so that you can grow a profitable practice, increase your financial confidence, and pay yourself unapologetically. Because your work is way too important for you to burn out or go broke doing it. Love the podcast? Make sure to follow and give us a 5-star review. Here is Therapy for Your Money.
Hello, and welcome to Therapy for Your Money. Today's episode is a listener suggestion specifically from Steph Corpel and Christy Pennison from the Practice Collab. They are friends of the podcast. They often will send me notes like compliments, comments on the episodes. And once in a blue moon, they'll send me an episode idea. And I usually use them at some point. So the topic for today is you're tracking KPIs. Now what, right? So obviously most practice owners know that they should be tracking a certain number of things in their business. But what is not always super clear is once you have a dashboard, once you have the report that your bookkeeper sends you, once you're looking at revenue, once you're tracking cancellations, like what do you do, right? Do you just take this information and nothing changes? Who do you share it with? Right? Just the act of tracking KPIs in itself is not necessarily leadership, but using those KPIs to drive ownership of various areas of the practice and decisions, that really is leadership. So the KPI itself does not trigger action. You need to use the KPI to know when to take action. So let's start with what exactly are the KPIs supposed to do, right? You can track a million different things, but is this a leading indicator that something is happening, or is it a lagging indicator? I think it's important to have a sense of which one it is. So a lagging indicator tells you something has already happened, right? When we look at, for example, last month's revenue or last month's profit, that's a lagging indicator because it has already happened. So there are always going to be some indicators that are of the past, right? So something has happened and we are good or we need to course correct. Then we have leading indicators that predict what's coming. For example, cancellations predict that you are going to have less revenue in a week or two, right? If you have a lot of cancellations this week, that means these are sessions that you're not billing this week and revenue that you're not receiving in the next 15 days, right? Referral volume going down over time. That's a leading indicator of revenue declining, right? So they are all kind of interrelated. And so having a sense of which one it is and which levers you are measuring and can pull can be really helpful so that you know what is going on. I also think that with KPIs, there's not necessarily a right or a wrong answer, right? It's just information. It's not biased in any way. It just tells you this is what is currently happening. If you're looking at the number of intake calls that your intake coordinator has scheduled, it's not good or bad, right? What is good for one practice might be bad for another practice, but it gives you information. It's just when you see variations, that's when you or the person who is responsible for that KPI, their little like spidey senses need to go off, right? And say, hey, this is different, or this has been declining or increasing for a number of weeks. What's going on? The KPI itself will not usually give you the answer and tell you exactly what's going on, but it is a clue, right? So then you put on your little Sherlock Holmes detective hat and go to the numbers or go to email or go to your team and say, like, what do you think is going on? So every KPI needs one clear owner, This is something that came up in one of our leadership meetings recently that I think is worth sharing here is if everyone owns the KPI, then no one owns the KPI. So each KPI should have one single owner that is responsible for it because that is going to give you maximum accountability. When it's shared between multiple people, it's really, really easy to see like, oh, well, I thought so and so was taken care of, or I wasn't working on that part of it. So one KPI, one owner. Then usually they're also the ones who is reporting that to you. I don't think as the owner that you need to be the one tracking every KPI, right? Depending on the size of your practice. If you're in solo practice, you are the one and only doing everything. If you have a 30-person practice, you're probably not really tracking any of the KPIs. You're however reviewing them, right? So someone else is doing the work of tracking that. I do believe simple is best. And so it should be something that you're able to get that information really quickly and easily. And that you're also able to verify that information really quickly and easily. I want to trust, but I do on occasion want to verify that what is reported here is actually the truth. And having those occasional spot checks is going to keep everyone honest as well. So then with a KPI, I want to have a defined review rhythm. Not every KPI needs to be looked at every single week, but some of them do. Some of them do need to be reviewed every single week. Some of them need to be reviewed every month, every quarter. So having that cadence, having some space in your calendar, having a way to make sure that that happens. Sometimes that's going to be in a meeting with your leadership. Sometimes it's going to be just you taking a look at the numbers that have been reported every single Monday morning, for example, for the prior week, right? Whatever that looks like for you. So that defined rhythm. And then having a sense of what the action is going to be if it is off track. Now, there's a little bit off track and there's a lot off track. And so if something is a little bit off track, maybe the action is we're just going to continue to monitor, or maybe we are going to take a handful of specific kind of medium actions. But if the KPI is significantly off track, then we go to kind of the nuclear option, right? If, for example, income was down 50% from one month over to the other, we're going nuclear most of the time, unless there's a really good reason for that to be happening that we already know about. We're going to kind of what is what happened? We're calling every payer. We're looking at the accounts receivable. We're looking at deposits. We're just overturning every stone to see what is going on. And so there are some degrees of action that are necessary depending on how serious and how seriously off track the KPI ultimately is. Another thing that can be really helpful is having predetermined, like what is good for your practice, a good number, and what is a bad number for your practice. So my team and we track KPIs just in a simple Google sheet. I'm a fan of simple. We already pay for Google. It's very simple. It could be an Excel sheet. So we use formulas within that sheet where each KPI has a range of this is green, this is yellow, this is red. So visually, it's also really easy to see if something is on track or if it is off track. And so that way we know what to do, right? If this number is beyond X, then we need to start hiring, for example. If this other number is below Y, then we need to maybe increase ad spend, right? So there's kind of this direct push and pull to avoid knee-jerk reactions. And that's ultimately what happens if you're not looking at the KPIs or if you're not looking consistency. There can be blame, like, how come you didn't, right? And you're kind of blaming various team members or even blaming yourself or these knee-jerk reactions. Whereas if you're looking on a regular basis, you can be really proactive and see it coming before something actually happens, before you're in an emergency state, right? If you're tracking, for example, what is our emergency reserve in a number of dollars? This is something that you can have, like we want it ideally to be within A and B. And if it falls below that, we know like, okay, we need to start being careful. Like what is the next thing that we are going to do? You also are going to want to revisit those on a regular basis, right? If the business has grown 20% year over year, you probably need to change these metrics because everything is going to look really good. And so you might need to readjust, have a regular cadence once or twice a year to look at them and say, do these ranges still make sense? But having those numbers and having that data is going to replace panic with process. You're not just reacting to the information all the time. You are proactively reviewing and knowing what you need to do ahead of time. So decide which ones you're going to look at how often. There are sometimes there's going to be sales or intake items that you're going to look at every single week, right? There's probably some billing items that you're going to look at every single week. There's probably utilization that you're going to look at maybe on a monthly basis. So you have kind of more information, right? Whereas if you're looking every single week, that could be helpful if someone is on vacation, though, right? It might throw things off a little bit. And so decide the cadence that you're going to look and review and talk about it as a team. You don't need to be responsible for all of them, but ultimately the business is yours, right? The buck ends with you. And so you want to make sure that you have visibility on what is happening. And I really do think the bigger the team, the more important this becomes. If you are in solo practice, you might be tracking a handful of KPIs, but you innately have a sense of what is going on in the business because you're the only one doing all of it, right? So the bigger the business becomes, the farther removed you become from certain operations, the more important those detailed KPIs can be so that you do know what is going on in various areas of the practice. That doesn't mean that you need to be involved in every hiring decision or know every client that comes through the door, but you do need to have a sense of what is happening in every location that you have with your various teams, with various operations. Also, when you have this data for multiple quarters or multiple years at a time, it's going to help you see if something is seasonal. Is this a blip? Is this a trend? And it's going to help you see the impact of operational changes. So if you add a new position, for example, in billing, then I would think that you're going to it would be reasonable for you to expect that you're going to get paid faster because you're processing claims faster, right? So does that reduce your claims over 30 days? It probably should, right? What is the expectation? And so you want to kind of predict in advance what you expect something to happen and then make sure that that is actually happening. So a couple of financial metrics that I do want you to be tracking on a regular basis. I would look at what is your profit margin, right? So as a percentage or as a dollar amount, but generally as a percentage, what is that? How does that shift month over month? What is the percentage of your payroll against all income? That number is something that you should be able to see, and you should have a clear expectation for what that is going to be because payroll is typically going to be your single largest expense. I definitely want you to know your cancellation rate, how many cancellations are coming in, how many intake touch points, whether that is online, phone calls, right? A combination of all those, like what is that number so that you can see if something is happening and what is the conversion from outreach to scheduled clients. That's a really important item to have. And then your operating reserve, so your emergency fund. To me, that's not just the dollars in your bank account, but if a separate bank account, like how much backup do you have so that you know how fast you need to act if something is going on. The smaller amount of emergency fund you have, the faster you need to make changes if things start going off the rails because you just don't have that much runway. So we started this episode with your tracking KPIs, now what? So the now what really is, in a nutshell, if we want to summarize, you're going to have a regular cadence for looking at them. You are not going to panic, but you are going to look at them to advise action needed or not needed, right? Hold or take action or everything is good, but at least you know, right? There's knowledge there. And then every KPI should have an owner who owns it, who reports it, who is responsible for taking action if it is off track so that you have accountability. And that's a really, really clear accountability framework within the team. If there's an owner, is it done? Is the KPI on track or is it off track, right? It's kind of, it removes a lot of the emotion and subjectivity to it when there is a clear metric. And so it helps you ultimately be an even better leader to your team. That's all for today. Take care.
That's it for today's episode of Therapy for Your Money. Catch us on Instagram and Facebook at Therapy for Your Money Podcast. And don't forget to subscribe to Green Oak Accounting on YouTube. Until next time.
The information contained in this podcast represents the host and guest's general opinions and should not be construed as personalized accounting and tax advice. Listeners should consider all facts and circumstances before applying this information and seek appropriate advice from an accountant, financial planner, lawyer, or other professional. Any info provided does not constitute accounting, tax, or legal advice.